Hello and welcome to our discussion on cost and management accounting. The focus of this presentation is activity-based costing, which talks about different ways in which the overheads can be absorbed, allocated to the different products. So in this session, we will try to understand the conventional costing based answers and determine the cost by using alternative approaches, that is activity based. The conventional costing is normally called as volume based costing because overheads are normally valued or apportioned, allocated and absorbed on the basis of the volume of input or volume of output. But in case of the activity based, the focus shifts from expenses to the activities. So in activity based costing, the cost is considered to be the sum of the expenses incurred for all activities required to manufacture and deliver the product. It says that the products do not consume cost directly. The costs are incurred on the activities and activities are consumed by these products. So in ABC, we bring in the activities in between the expenses and the cost object. In conventional costing, we see the expenses directly linked to the cost objects, but here we say that the expenses are consumed by activities and activities are consumed by the objects. So to understand the cost or to manage cost, don't just manage the expenses but manage the activities. And so there are steps are: find out the cost pools, identify the activities, map the cost to those activities, understand and define the activity drivers, find the absorption rates per activity, and then calculate the cost. We will see that as we move along to an exercise, that these activities can happen at different levels. So activities are classified into unit level, which are performed at each time a unit is produced; batch level, performed each time a batch is introduced or produced; product level, depends on the types of products; and customer level are all those activities which are related to supporting a customer; and facility level is considered to be a residual head of activity. Now let us take an example and see how the costing changes the profit per product and the profitability of the product. So are all products equally profitable is an important managerial question. Suppose this company produces 3 products called valves, pumps and flow controller, and the units are 7,500, 12,500 and 4,000 respectively. The direct material and the direct labors are given, and the overhead, which is common overhead, is 680,000. So in order to find the cost, let us first assume that we are going to do this, find the cost and profit by using a single absorption rate. And suppose we assume that the single absorption rate is volume, so 28.3 is the absorption rate per unit of output, 28.3, and we use this to find the overheads for each product. So the overheads are charged by multiplying the volume into the units. Then you have the total cost. So the total cost of this 3 products is 362,500, 704,000 and 226,000 So observe the total cost. Okay, so the total cost is 12,000 or 1.29 million, and so cost per unit is total cost divided by the units. We get 48.3 for valves, 56.3 for pumps, and for flow controller it is 56.73. and suppose the sales price is given, on some basis they fix the selling price, and so profit per unit is 9.67, 4.67 and 3.27. okay, 3.6. so the total profit for each product is profit per unit divided by the multiplied by number of units. We get the profit, sales and the total cost. Suppose we highlight it so that we can compare this with the other information as we collect. And so the profit margin of these three products are 17%, 42% and 35% respectively. So single absorption rate shows that the valves are least profitable, and pumps and flow controllers are giving a profit of 42 and 35% on sales respectively. But suppose we feel that this absorption is not very accurate, because it's possible that these overheads are not fully driven by volume of output. So let us investigate this nature of overheads and understand. So the additional exercise gives us this additional information, that we realize that out of the 680,000, 572,000 is the labor related overheads. That means they're driven by the labor. And 108,000 is the product related overhead. That means they're driven by the volume of production or the volume of output. So instead of having one absorption rate on volume driven, here we decided to calculate two absorption rates. So one is absorption rate based on labor, the other is the absorption rate based on the volume of output. And using this we calculate the cost and profit, and the cost and profit gives us a different picture now. Observe this overhead, we will make it okay, so a different color so that our focus, and observe the overheads here. In this case the overheads are absorbed by using the labor as a driver and by using the volume of production as a driver. Instead of one absorption rate, we use two absorption rates. So the double absorption rate has given the volume is not the cost driver, but there are other cost drivers too, and that is the labor cost. So depending on the nature of the overheads, we determine the overheads. But you see, the overall total overheads are same, but the way overheads are apportioned, allocated and absorbed over these three products are not same. So as a result, observe this profit, total sales and the total cost. Total profit, total sales and total cost, the total amounts may be same, but the per unit or for the product wise the profits are not same. What do we observe now? By using double absorption costing, we saw that the valves are also profitable like pumps and the flow controller. It's not 17% but 32%. So this method is saying that all are equally profitable. But here also we have observed that the overheads are allocated on the basis of the volume of input, which is labor, or volume of output, which is the quantity of goods produced and sold. Suppose we want to understand this cost better, these expenses, overheads better, and understand the underlying activities and bring in the richness of activity-based costing. Will the cost and profit change? Now let us observe that. For that you need lots of additional information. The additional information says there are 5 different activities this organization is engaged in: receiving, handling, engineering, packaging, shipping, maintenance, and some machine related expenses. So so identifying the activities is the first step. Now for each of these activities we map the total overheads by using some basis, and it says for each of these activities consume this much of expenses, which are overheads. The summation of that is 680, which is same as the 680 that we saw here. But unlike this one, the labor related and product related, we further classified the overheads on the basis of the activities. And then we found what are the drivers of these activities. So based on discussion and observation, we saw that the machine depreciation is driven by machine hours, receiving and handling are driven by the number of orders, engineering activity is driven by the machine hours, the packaging and shipping depends on the number of shipments, and maintenance hours drive the maintenance. And using these drivers and the number of hours or number of orders, number of shipment, we find the activity absorption rate. So for each activity we determine the rate. So 25 rupees per machine hour the depreciation is charged. 440 per order is the receiving and handling cost. 60 rupees is the cost of shipping and packaging. So each activity we try to find the activity driver, then an activity based absorption rate. Now using this we will find the cost of each product. But before that it's necessary to know how much of these activities are consumed by these products, which is given in this part of the table. So each product wise the activities consumed are given, okay, and the total of that is equal to the total of the drivers that we have been observing here. So let us use this activity driver and activity absorption rate to find the cost and profit. So unlike the previous case, we are going to allocate the overheads not by single absorption rate, not by double absorption rate, but we bring in the richness of activity based rate, and each expense or each overhead is charged by using the activity based absorption rates. So depending on the activity rate, and the activity consumed by each product, we find the total cost. So for valves, the total overheads absorbed on the basis of the activities is total comes to 140,000. And the same exercise is done for each product, pump and the flow controller. And in the process, we absorb the 680,000 to different products by using activity-based absorption rates. And what do we observe here? That we see the total profit, total sales and total cost. Total profit, total sales and total cost. Total profit, the profit that we made here is 1,44,000 for valves, 708,000 for pumps, and there is a loss for the flow controller. So all other things remaining constant, what we see here that unlike the previous calculations, the margins of the flow controller becomes negative. The margin for flow controller becomes negative. So the new basis of allocation, apportionment and absorption using the activities consumed by each product, we find that the flow controller is a loss-making product. So in the previous two calculations, we saw that flow controller is making profit. So that means the loss of flow controller may be due to wrong pricing, and the wrong pricing may be due to wrong costing, and wrong costing is due to wrong allocation, apportionment and absorption of overhead. So we feel that activity-based costing will try to reflect the business reality. So cost allocation, apportionment and absorption based on activities will reflect the business reality. So the cost tends to be accurate under ABC. So if you compare this cost, so we can see that the profit per unit in all the three cases is a huge difference because of the absorptions. Because the absorptions are different, the overheads are different, charged to each product. The totals are same, but overhead charged to each product is different. And because the overheads are different, the selling price remaining constant, the profit is different. So activity-based costing makes an effort to shift the focus from just expenses-driven cost management to activity-driven cost management. Understand the activities and then try to manage the cost is the contribution of activity-based costing. And these activities, they are consumed differently by different product, so the cost will be different. So unlike the single absorption rates, whether it is labor cost or volume cost or material cost, here we try to link the activities consumed by each product, then decide the cost. So on the basis of this example, we can say that activity-based costing makes an effort to show the complexity of business. Therefore, cost calculation using activity-based costing is more accurate and reliable and can give us a better data to manage the products and the expenses accordingly. Thank you very much.